All right, good morning, everybody. It is the day after the election, and yet we still don't know who the president of the United States is. A lot of states are up for the toss-up, especially for the states that are really, really important right now, like Michigan, Wisconsin, Pennsylvania. Georgia hasn't called it yet. North Carolina, even Arizona, though we think that President Biden or former Vice President Biden may actually have that state, but still a toss-up, and the state hasn't officially called it. So a lot of things happening. I want to have a conversation with you guys. Obviously, what do you think is going to be happening? What do you think is the aftermath? I know President Trump last night at 2 a.m. Central Time, pretty much came out and said, hey, we're going to take it to the court. We're going to make sure that each vote has its integrity and its legitimacy. So I don't know. This could be dragged out for a couple of days. I don't know what your thoughts are, but obviously, this is a live show for you guys, and we have a lot of different talking points here today, especially when it comes to the election. And we'll talk about, of course, buying foreclosures, buying real estate when the market hits a recession. So that's a question I thought about yesterday. Is okay. The recession is something that we're projecting for 2021. How can we give you guys value in terms of finding deals during those times, right? When the market hits the fan, when real estate prices start coming down, maybe we see foreclosure and delinquency rates go up. What do we do? How do we respond to that? And this channel is all about real estate investing, finance, and making money around the topic of real estate. So I want to cover that topic today as well. Give you guys some really cool training, perhaps, in midst of what's happening. But of course, we got to talk about the election, and because that's what everyone's, their mind is occupied right now with the election. So I'm going to get my live chat feed up. So what I'm going to do for the next 10 minutes or so is have a conversation directly with you guys. And I want to hear your thoughts, because yesterday was not honestly what I was expecting. The way the direction was going, I thought President Trump had it. And of course, now we're understanding that there's a lot of mail-in votes and late votes that hasn't quite been counted just yet, and they have yet to be factored in to the polls. So I want to hear your guys' thoughts. What were your reactions? I mean, I was up till 2:30 a.m. last night Central Time, tracking what was happening, listening to different points and perspective. But I want to hear your guys' perspective, because obviously you guys matter a lot, more than what the news have to say. You guys are the American people. So I'm going to go and get my chat feed up and see what you guys have to say. Make sure, Katie, we're up, right? Just want to make sure that we're good to go. So for some reason, I'm not seeing my chat feed. Oh, there it is. Okay. So I'm going to go ahead and see what you guys have to say. And the chat's open, by the way. You guys are, and I'm paying attention. I'm constantly paying attention to what's going on. SM is saying, mail-in balance skewed towards Biden. Yes, Trump has done very well, much better than the polls. Yeah, that's actually quite a bit of surprise. I think that surprised a lot of people yesterday is the polls, which a lot of them have been skewing towards Biden. A lot of them were pointing at 0.5, 5+5 for Biden, +3 for Biden. And I was literally scrolling down the polls, and all of them were blue, nearly all of them. I think I saw one or two outliers that were giving Trump +4, +3. But what we're seeing now, as far as reality, is completely different from what we anticipated the last few weeks. So again, the election is not over yet. There's still a toss-up, and I'm getting the election results up live so that I can see what's going on. And another thing, of course, I was hoping that Daniel would join us here today, but Daniel is still down and sick. So please wish him well, and hopefully he will recover and he'll join us for our live show every day. That being said, Friday we will not have a live show because we're going to be hosting our free 3-day live real estate training. I know, election in the mix. It's going to be very interesting. But if you guys want to attend the free 3-day real estate investing training that we are co-hosting, the link is down below, and that is Real Estate Domination. This training, guys, it's going to be unbelievable. Daniel and I have been preparing for this training for the last few weeks. It's going to be amazing. It's going to be like the hot stuff. I mean, it is going to beat whatever depression or whatever anxiety we're experiencing right now with the election. But with the real estate investing training, I'm going to show you how we went from 0 to 75 units in 1 year. Of course, we're going to talk about the book in just one sec, but we're going to show you how my brother and I, at the time we were 20 and 22 years old. Yeah, 20 and 22. 20 and 22 years old. We were still in college. We had this pipe dream of wanting to become a real estate investor. And you know, at that age, we started buying rental property without using our own money, without using our own credit. You know, we didn't go rob a bank. We're going to show exactly how we did it. And we have some phenomenal speakers, unbelievable speakers. We got Ty Lopez, Jerome Maldonado, Brandon Elliott. We got Sean Malone. We have so many diverse expertise joining us in this 3-day training. Don't want to miss it. The best part is it's free. You can get your free ticket. All you have to do is go down the link. In fact, probably Katie or Nick will throw up the link on the chat box, so you guys can go ahead and grab your free tickets. Free tickets, y'all. And of course, you can upgrade to the VIP. All right, so let's go ahead and look at you guys's your results. So Gregarious Accountant is saying, thank you for being here today. I needed this. Yes, I'm here for you guys. And please stick around. Go ahead and smash the like button. Share this video. It really helps us out with our YouTube algorithm. The more you share, YouTube sees that as, oh, this is an engaging content. So they're going to try to promote as much as possible. So if you guys can share, awesome. Thank you and love you guys. So Gregarious Accountant is saying, why are the markets going up with uncertainty? So that's a good question. This morning I woke up, Dow Jones is going up. You know, we got S&P that went up, and not by, you know, thousands of points, right? We're not seeing a huge uptick, but we are seeing somewhat of a positive, you know, a boost in terms of what the markets are doing. And I think they are counting on the fact that Georgia will probably go to President Trump. They may call it today. North Carolina will probably go to President Trump. Pennsylvania, I think that's a big question mark, because historically, from what I remember in 2016, that's what made it tick for President Trump. As soon as I saw President Trump take, or then candidate Trump, Mr. Trump, take Pennsylvania, I was like, okay, this is over. Trump has it. On the media, the legacy media clearly did not do a good job predicting who was going to be the next president. You know, of course, back then it was Hillary Clinton versus President Trump. But Pennsylvania is a big toss-up right now. Of course, there's a lot of resistance from Pennsylvania in terms of, you know, even the governor came out this morning and said, well, you know, we're going to make sure all the votes are counted, and we're going to make sure that there's no outside interference. Of course, I think he's referencing to the fact that President Trump did say last night that he's going to take this to the Supreme Court if he finds reasonable cause that there's some sort of fraud, election fraud, which, you know, we all saw it coming. So with that being said, I think what's happening is the sensible people are, I wouldn't say it's the sensible people, the market and investor are almost sure that Trump's got this. I'm not saying that's the case, but I think judging by where the money's going, and a lot of times the rule that I like to say is follow the money, right? Follow the money, see where the money's going, and you can make a pretty good assumption and direction as to what's happening. So judging by the market, and typically the market likes Donald Trump better than Joe Biden, mainly from the fact that obviously there's a lot of unfavorable tax laws that Joe Biden has already proposed. But I think that's a good indicator. Maybe, maybe not. Again, I want to have a conversation with you guys, and I want to see what you guys have to say about who's winning, what's going on. What do you think the election's coming down to? Okay. So, yeah, Gregarious Accountant saying get better soon, Daniel. Hopefully Daniel's watching this. I don't know. Maybe not. Maybe he's fact checking me right now. Who knows? S&M is saying markets did very well after Trump win in 2016. Yep, that's true. I saw some volatility in the market last night, but as Trump did better, they went green again. Do you think Trump is better for the markets? I do believe so, and I'll say this because I'm not like 100% pro-Trump. I'm not 100% pro-Biden. Although I do see a greater benefit for the economy with the Trump presidency. Mainly has to do with, you know, what a lot of President Trump did from business and economic standpoint is he took down a lot of the regulation. And if you guys want to know how I feel about regulation, is it does slow down growth, and this is so true in real estate. You look at Los Angeles County. You got the process of getting a building permit just to build an apartment building in Los Angeles is so long, detrimental. It takes forever, and let's not even get to the cost, right? The cost of getting the permit, the drawing, getting approved by the county. It is so astronomical to the point where builders are so demotivated to build any more apartment buildings in places like Los Angeles. Same kind of goes with Seattle, New York City, a lot of these larger metropolitan areas where they have larger regulation in place, where it's nearly impossible to build or remodel and create more supply in terms of housing. So I think with less regulation, yes, it's better for the economy. I think it's going to do better for the market. It allows the market to be more agile, meaning these different companies and businesses, without these regulations, without these red tape, they can act quicker in developments and also research moving forward. So I think for as far as economic perspective, and purely from economic standpoint, free markets perspective, I think President Trump is going to do it better in terms of that. In other aspects, we kind of seen from the social side, when it comes to social issues, and again, this channel is not necessarily commenting on social issues, but I think there are areas where President Trump could probably improve when it comes to social issues. Economically, I think economy will do better, market will do better under President Trump. So that's just my opinion. But I mean, let's get this conversation keep going, guys. I love what you guys had to say. You guys are doing, I love you guys. Your feedback is very valuable. Dennis saying Dennis Repetition all the way from Wisconsin. So Dennis, I'm guessing you voted. Wisconsin right now is a big question mark state right now in terms of who has presidency or who will become the president. I'm just looking at the results right now, or at least what the states are doing in terms of calling it. Wisconsin has not called it yet. Michigan has not called it yet, according to Associated Press. And that's one thing that I was kind of bothered last night was, since when did the press start calling for president? Right? I thought it was the job of the official, the government officials in the state that called it. Right? So I don't know. Anyways, Associated Press says Wisconsin, Michigan has yet to be called, but obviously Biden is leading. Pennsylvania, North Carolina, Georgia is yet to call. Alaska has yet to call. Oh, Nevada as well. Nevada is another big question mark to me. I thought Nevada was going to be red from the beginning, and I was wrong in that. But Nevada, in terms of Nevada, President Trump's not too far. He's not too far off. He's honestly 0.6%. So he's 8,000 votes short, and only 67% are reporting in, according to Associated Press. So there's still obviously 33% to go in terms of the amount of votes that need to be counted. If the remaining 33% of the votes from Nevada are late or early votes or mail-in ballots, then it's a slippery slope for President Trump in terms of can he take Nevada, yes or no. So right now there's a lot of uncertainty, and some commentators are saying that this could take days. I mean, we may not know who the president is, maybe even until next week, but there's a lot of pressure, and I'm hoping that there's kind of a movement in terms of result, whether it be Biden or Trump. We just want the answers, right? And we also want a fair election, right? We owe it to the American people that there is an integrity and authenticity in terms of the election process. And if there is no authenticity and integrity in the election process, then, I mean, that's horrifying, right? So we want there to be obviously fair and accurate election. And I think that much is true. So let's keep the conversation going, guys. I would love to see you guys coming in. I would love to hear your comments and have a conversation. That'd be great. All right. So let's go ahead and so Gregarious Count is saying real estate under Trump definitely better in short term. Yeah. So right now, Daniel and I have been predicting again. I don't know about we're going to see an immediate effect of the market going upward in terms if Trump wins. I think, based on every other data that's stacked against whoever becomes president, I think the real estate market will still suffer, and it will be bloody, even if President Trump wins. Whether it's Biden or Trump, again, I've been saying this for the last 3 days. I think no matter who becomes the president, we're still going to have some kind of bloodbath when it comes to the real estate market. I'm not quite sure about the stock market. Our channel really doesn't follow the stock market as much. We've been so kind of nailed down into the real estate market. But I think there's going to be a crash, which also leads a great and perfect segue to what can we do to buy real estate if there is a recession. Now we're predicting that there's a recession. Again, we don't have a crystal ball and to say, there's going to be a recession for sure. But based on data and statistics that Daniel has been gathering and he's been researching, we do anticipate some kind of correction in 2021. Now, where and how could those corrections come about? And I think I have some opinion and predictions on that. I think a lot of it is going to come from very sensitive borrowers, and I'm talking about FHA borrowers with lower credit scores, lower down payment. I think that group is going to be very sensitive in 2021 in terms of a market crash. I think they're the first ones to go. I honestly think so. I think also this round is that commercial real estate is going to be. I mean, commercial real estate is already on its way. I mean, if you actually come visit us here in the Kwak Brothers office, a large portion of this office complex is empty right now. The office industry is not doing too hot. So I think commercial is definitely on its way. It's going to that direction. COVID didn't help. Businesses shutting down. And we talked about it yesterday or the day before that New York, half the restaurants may not even come back. I mean, I'm talking about New York City, Manhattan to be precise. So commercial isn't doing well right now. But I think next year residential will quickly follow, and that's going to be the FHA borrowers, the individuals that put down very little, no equity, very little equity, low credit score, very high risk borrower profile when it comes to lending. So I think they're the first ones to go. We're going to see a spike in mortgage and foreclosures. Short sales are definitely going to be up on the rise. And also, it didn't help that we had this weird mortgage forbearance program, which in a way, I think it did a good job. I think the mortgage forbearance, FHA, and these governing agencies did a fairly good job when it comes to making sure that the mortgage forbearance doesn't bleed out and explode back into the borrower's face. I say this because they did a good job in terms of making sure that anyone that has an FHA, VA, or government-backed conventional mortgages, they did a good job when it comes to repayment structuring. But there's some cracks in that. And I will talk about the cracks very soon. But nevertheless, I think they did a good job, and you kind of have to give them credit for, because a lot of times these government agencies don't tend to do well when it comes to managing these types of crises. I mean, just look at SBA. We've been talking about how the SBA has been subject to fraud. Over $78 billion of SBA EID alone was given to fraudulent and fake applicants. $78 billion, just poof, gone. Like no one knows where they went, right? So when compared to that, I think FHA has done a little bit better in terms of containing any kind of spillouts or any kind of explosion that could have taken place in terms of homeowners not being able to pay their mortgages, mortgage rates going into default, mortgage going into and contributing into the default rate. So, but there's still cracks. So primarily back on track. I think what FHA has done great was that they did a good job making sure that homeowners didn't owe a lump sum payment at the end of the mortgage forbearance period. I also think they did a good job when it comes to giving that extra 6 to 12 months extension if they needed to delay their mortgage payment. But I think part of me also says, well, that's kind of kicking the can down the road. It's just delaying the inevitable. So 2021, I think that group is going to be the first ones to go. We're going to see some pre-foreclosures starting to peak. We have to pay attention to what happens to the mortgage delinquency rate, which we could actually pull that up right now. Thankfully, I have the power of internet in front of me. But let's look at the mortgage delinquency rates and see where it's trending right now. So September 8th, we saw a serious delinquency spike. That's a blog, so it may not be a more credible source. October 13th says mortgage delinquencies jumped to highest rate in 20 years. I'm just looking at other things here. So it looks like it is going up. The mortgage delinquency rate is starting to kind of go on that uptick. Yahoo Finance, not the most credible in the world, but still credible. This is an October 14, 2020 article. The delinquency rate is creeping up, but not in the most serious, severity way. It is going up. I'll just say that. But I think next year is going to kind of be that tipping point. So what can you do? What can you do if you are a real estate investor, or if you have an ambition, or if you have any sort of desire to buy real estate as investment? What do you do next year? How do you take upon some of these opportunities? And how do you come out ahead? I think, first of all, we're going to see the days of subject to deals come back. Now, for those who don't know what subject to transaction or subject to acquisition is it's the idea where you take over someone's mortgage payments, and they transfer the ownership right, or ownership, the deed of the property, over to you. So essentially what would happen is, you would approach a person that's struggling. They just want to get out of the house. They don't want a foreclosure. They don't want to deal with any sort of kind of a backfire in terms of credit. So what you would do is, hey, Mr. John Doe, I see that you are struggling. I'm sorry to hear about that. What I'm here to do is help you and give you some solutions in terms of taking the least amount of damage to your credit and still finding ways to get out of this. So one of the things that I would introduce as a real estate investor is, hey, Mr. John Doe, how would you like it if I took over your mortgage payment, gave you a little bit of cash, and essentially I would take over your mortgage? Would that be a good thing? And a lot of times when it comes, a lot of these motivated sellers, especially individuals that are careful with their credit, they don't want any damage to their credit. They still want to be able to buy another house in 2-3 years. A lot of them may take that out, right? A lot of them may say, well, okay, yeah, I don't want any foreclosures. I don't want to do a short sale. I don't want to do deed in lieu, which means just forfeiting the property back to the banks. That seems like a reasonable option. And I've seen a lot of these transactions go down back in 2010 through even up to 15, there was less, but between 2010 through 2014, we saw a lot of these subject to transactions where a lot of these homeowners just couldn't keep up. They just, you guys all know what happened. 2008 through 2012, a lot of these homeowners, they just couldn't keep up with the mortgage payments. They knew they were in trouble. So that's one approach that you can go ahead and make. Now, one thing that is going to be a struggle when it comes to trying to negotiate a subject to transaction is the emotional component. A lot of these homeowners may be attached to their property. There's some sentimental value there, or they may just simply outright refuse to follow your plan, right? So part of the negotiation process, you have to be able to understand the emotional aspects of it. Of course, being able to wisely negotiate that kind of transaction. So again, just to recap, what I just talked about there is subject to transaction where you would take over the homeowner's mortgage payment. Obviously, the homeowner deeds the property to you, right? You may give them a couple $1,000s for them to kind of cover moving expenses and cover their security deposit if they're looking to get, if they're looking to rent. So that's an option, which it's going to be fair. It's going to be a good deal especially if there's a lot of equity attached to it. So let's say there's $100,000 mortgage balance and a house is worth $150,000, and you just take over the mortgage payments and throw some extra cash to the homeowner. That's obviously $50,000 worth of equity you just earned just by doing that. That's a pretty sweet deal. So that's one way to approach it. Now, the question is, how do you find these subject to deals? We saw a lot of these, off on the road signs that said, hey, I can help you save yourself from pre-foreclosures, right? You guys may have seen those signs before, right? It's a yellow, ugly signs on the street that says, pre-foreclosure, ? I can help. And there's usually a phone number on these signs. A lot of the cities since then have banned these ugly yellow signs, right? They're often called the bandit signs. A lot of the cities didn't make rules to make sure that you don't post these, but you can do a lot on the world of social media now these days, or simply through referrals, right? You can go and advertise yourself and say, hey, if you're in a pre-foreclosure, if you're struggling right now with your mortgage payment and you don't want to deal with a foreclosure, call me. I may have a solution for you, right? That's another way to kind of advertise yourself and get out there to make sure that, and some people may say, well, you're taking advantage of the homeowners. I disagree, right? If you can help a homeowner not get foreclosure on their record, not have to deal with the mortgage payment, this pain of obviously this financial burden, and you introduce yourself as a solution, I think it's a fantastic way of helping out homeowners. So I don't dismiss that as, oh, taking advantage of a homeowner. I don't think that's true. So let's go and look at some comments. So Gregorius accountant is interesting. Elizabeth double voting on you registered voters not yet counted. Would be interesting to know their progress. So it looks like Gregorius is commenting, replying to someone named Elizabeth. Elizabeth saying Zero Hedge reporting 109,000 more Wisconsin votes than registered voters. Interesting. It is possible because I think, at least in my state, and I could be totally wrong, you guys can fact check me if you guys want, but at least in my state, you don't have to pre-register. You can actually register at the poll. I don't know if it's true with Wisconsin or not. That's just been what at least my state has done, which is a question mark. But that is an interesting note, right? And I agree with Gregorius accountant. That is very interesting. Sunshine Daydream is saying, I'm guessing it will just level off if they shovel more stimulus into the economy. Same with stock market. So I think on the short term, it will help the economy when it comes to stimulus, right? If you pump more stimulus into the economy, do I think it could help? On a short term, yes. But I think in the long term, no. I think it's going to have, in fact, I think it's going to have a devastating effect long term. I don't think it's going to be a good thing for the country down the road. Let's say 10 years down the road, with this amount of stimulus that's pumped into the economy, unless we saw this back in the Great Depression in 1930s through 40s. Unless there's some sort of world war. The last time we had this much of government spending and tremendous amount of money printing was back in the 1930s. Of course, there's some series of events in between, like quantitative easing and other events like the inflation in the 1980s. But we've seen stimulus level kind of spending back in the 1930s, and then what preceded and what really actually helped our economy was the war, right? The World War II actually really helped and boosted our economy like no others. I mean, you guys seen in the 50s and 60s, we had a surging boost in terms of the economy, and we did very well. So let's not hope that there's a war, right? Let's not hope there's going to be any war. I hope there's not, and yeah, hopefully there's not going to be any of that. A1 Beltran is saying, what about booming states like Texas and Arizona? Good question. I think this round of housing market, and I think Daniel can probably explain better than I could, but I think this round of upcoming housing market will be merciless. I think, and also this go round will be even more merciless to states that had a more of a easier lending law, right? If your state required less in terms of strictness and stringiness, I can't even say that word, stringiness in terms of lending criteria, I think they're the first ones to go, mainly because a lot of the individuals that shouldn't have been qualified to get a mortgage were getting qualified for a mortgage. For example, FHA guidelines several months ago, if you had 630 credit score or 620 credit score, you can still technically get approved for like 1.5% down payment. And I mean, that's ridiculous. So a lot of the riskier borrowers, again, are going to be the first ones to go. I think they're going to take the hit first, and then that's going to go ahead and kind of have this avalanche effect in terms of more and more homeowners kind of following suit. So we'll have to pay attention. If states like Texas, sometimes Texas does have a more of a kind of a wild, lending type of practice. Texas, Arizona, and I know California and New York is usually the first ones to go, mainly because they swing quite a bit. But you never know. Again, this is just my opinion. I don't have the crystal ball. Daniel will come back and kind of give you guys more updates on that. Dennis Repetition is saying, go for middle class or better properties if Trump wins. If he loses, C&D holdings. Actually, Dennis, I want to hear your thoughts on that. Why do you think so? I want to say, I mean, I can kind of see where the logic is going there, because obviously if he loses, then you're going to see the wealthier kind of lose some of the money and the wealth. Therefore, you're going to see a decline of Class A and Class B type of properties. I can see that logic, but I want to hear more of your thoughts as to why, right? I want to hear you rationalize it as to why you think if Trump loses, then you got to go with the Class C and D properties. Which, by the way, if you guys don't know what we're talking about, there's different classification in terms of real estate assets. So there's Class A, B, C, D, and it's just like a school grading rubric. Class A is like your luxury apartment, right? It's got the swimming pool, it's got the PC room, what I mean by PC room, personal computer room. You got your hot tub jacuzzi, you got your tennis court, you got some just a lot of cool amenities, right? High style living, right? Class D will be, obviously some of the more rougher neighborhoods, urban, metropolitan neighborhoods that are struggling quite a bit. Class C is basically a war zone, right? You don't go into Class E, and make it out alive. Which there are investors that specifically go into Class E and Class D neighborhood and just totally dominate it. And of course, we know that today is gentrification. They go in and put millions of dollars in transforming the neighborhood, trying to boost the real estate taxes there and gentrify. But I want to hear your thoughts, Dennis, as to why you believe so. That's kind of. I'm curious about that. Gregarious Accountant is saying risky is bad right now. For sure, I'm focusing on cash flow right now and reducing monthly payments. Yeah, and I've been saying this for many, many months, and I can't believe, Gregarious Accountant is echoing what I'm saying. I think the last 12 months was phenomenal opportunity where you don't spend and buy stuff. Daniel has been saying the same thing. Daniel and I haven't bought a single property the last 12 months. I'll be honest. And we did this because we knew that the timing of the market was not correct for acquisition. For us, what we've been focusing on is cutting down expenses, paying down loans. And you saw our videos. We made a ton of videos about paying off your mortgage, paying off your debt. I think the last 12 months was that opportunity when the general market, the masses were going out and saying, oh, it's time to buy and buy and buy. Prices were skyrocketing. The stock market was doing really, really well. Real estate prices were going up. I think that was a phenomenal time to sell. And I think we still have an opportunity to sell. I think the real estate market will still remain hot till March-ish of 2021. So if you have any thoughts about selling right now, I think it's a phenomenal time to sell. The window of opportunity for you to sell and get the selling price that you want is slowly diminishing. So right now is a great time to sell. Right now is a great time to pay off your debt. Start going slim. Start going to where you're paying down your expenses. Don't go and dine at 5-star restaurants. I think this is a terrible time. I think it's a great time to stockpile your cash. Go to more of a shorter term investment where you're not tying up money for too long. I think right now is that time, that opportunity, and we're at the final kind of phase when you have that available. So if you guys want to hear my thoughts of more of a general investment opinion, I think right now is a great time to sell and go to cash or short-term type of investment where you can quickly liquidate it. And by the time the market kind of slows down and cools down, you're able to deploy your cash at a much greater rate. But I think another caution to consider is don't react too soon. What I mean by that is if you start seeing news headlines, if you start seeing the market going like this, don't be the first one to dive in and say, oh, I'm going to buy right now because the market's dipping. Wait for it. Wait for the data. Don't be the first one to have this knee-jerk reaction of, oh, right now it's time to buy. So don't be that first guy, right? Usually, it's funny I say this, but usually the first guy that enters the door gets shot first, right? I'm using my military reference, but usually the first guy to go in, it usually takes all the beating. And then the second guy or third guy goes in, okay, all right, they're taking a beating. We got to be cautious. So be cautious not to also do that. So there's this kind of a unique balance where, you gotta jump in when the market is starting to slow down and the price is starting to come down, but don't be that first guy to go in. Okay. Dennis Repetition says Biden will pump free money for low-income areas. True. I agree. I'm selling 2 properties. Yeah, I'm selling a couple of my properties as well right now. So I guess this is a free advertisement. If you guys are interested in buying my properties, I know I just said to sell and don't buy, but I guess you gotta listen to my my opinion. Anyways, with that being said, I want to talk about our free book that we're giving away before we wrap up the show. Guys, this book is free, and it will change your life. And I'm not saying it because I wrote the book, but this book would totally be a game changer. And I think this is a great segue from what we've been talking about, is if we are expecting a market crash in the next 6 to 12 months, what a fantastic way to be armed and be ready for that, right? There's not a better time and opportunity where you can go prepare yourself, get the knowledge you need, get the systems that you need to be able to buy rental properties as much as you can. So right now, we're giving away this book for free, 0to75units.com. You can see Katie, just thank you so much for putting that in there. But you can go and grab this book for free. All you have to do is pay for shipping. We're going to show you exactly what we did to buy 75 rentals in 1 year without using any of our own cash or credit. In fact, we go through quite a bit. I mean, there's diagrams, there's charts, there's tables, right? You guys can see that. It's 291 pages of content, nonstop strategies, and we're going to show you exactly how we were able to do that. So go grab your copy. The link is down below in the video description, as well as Katie just threw that on the comments. So go ahead and get your book. Don't wait for it, because we only have limited copies. Okay, so let's go ahead and touch our last segment. And this is a really quick news. We're not going to settle here for too long, and we'll kind of go through this, answer some questions, and then we'll wrap up the show, and we'll hopefully have some new developments when it comes to election results. Right now, just to give you guys live updates, no states have called. Let me go and refresh this page, because you never know. None of the contested states have called. Georgia is still pending. North Carolina, Pennsylvania, they're all on standby. Michigan, Wisconsin, and Nevada, they're still on standby, as well as we can't forget about Alaska. Poor Alaska, right? We oftentimes forget about Alaska. So those are, again, still a toss-up. There's no clear indication right now. No states have called since last night. So we're still waiting. With 238 electoral votes for Joe Biden and 213 electoral votes to Donald Trump. Okay, so I want to quickly share this with you guys, and this is something that you guys might be interested in. But the IRS has just released, or a couple weeks ago released, their new tax brackets. So let me go ahead and list these out, and this, obviously we have to pay attention to how much taxes we're paying. Very important. So right now, if you are a single filer, and if you're making less than $9,950, then the tax rate for you is 10%. Now, this is also considering the fact that there is a standard deduction of $12,550. So any dollar you earn above the $12,550. So essentially, if we combine the standard deduction, it would essentially become around $22,000. So if you're making $22,000 or less, between $22,000 and $12,550, your tax rate is 10%. $9,950 or more, and that goes up to $40,525, 12%. 22%, it just kind of kicks in after $40,000. So if you make more than $40,000 and below 86, that's 22%. If you make more than $86,000, 24%, 164, 32, 209,000, 35%. And if you make, of course, any dollar earned above $525,000 number, that's a 37% tax rate. Similar kind of logic goes with the married couples, or if you're filing jointly, 10% for $19,900 less. Which, by the way, the biggest takeaway from this, with this new adjustment, is that the IRS has actually increased the standard deduction from $12,000. Well, yeah, they just increased it by $150. So not a whole lot in terms of, to see any big substantial changes in your tax bill, but they did increase it by $150, which means that, you actually end up paying a little bit less taxes for everybody. This is a win for everybody. So it doesn't matter if you're rich, if you're poor, this is a win for everybody for the year of 2020. That will kick in 2021. So if you're making less than $12,550, pretty much you don't pay any taxes. You're scot-free. So this is very good. Good for the American people. I think everyone won in terms of the new standard deduction. Okay, so let's go ahead and do some Q&A, and we'll wrap up the show. Hope you guys are staying safe. Hope there's no rioting, there's no looting. I heard some looting and rioting last night in different states, like in cities or states like Portland. I heard DC had some little bit of violence, but hopefully not. So Gregarious account is saying be reselling properties, very regional. Yes, follow the data. I'm in Boise right now. There's room to grow in the burbs, especially as currency is weak. We're experiencing huge inflation in real estate. Possibly true, yeah. Which, by the way, I love Boise for the scenery there, the mountains and everything. Pretty cool. Dennis Repetition is saying, I'm buying 4 books to give as gifts. Oh, very nice. Thank you so much, Dennis. Love you and appreciate you. Justin Kim. I know many Justin Kims. I don't know if this is Justin Kim that I know. Can you add the link to that page? I'm guessing Justin's asking for the book link one more time. So, Katie, if you can, no? Oh, the IRS. Oh, okay, got it. So let's go ahead and throw this up on the comments. So yeah, this is by Fox Business. So let me throw this up on the chat box. So go ahead and check that out. You guys can go do your own research and read. I encourage you guys to do your own data searching, right? So there you have it, folks. If we don't have any more questions or thoughts, of course, if you guys are watching the recording or if you guys are watching this after our live show, you guys are more than welcome to put your comments down below. We always pay attention to comments, and we take our channel very seriously. And yeah, we're relatively new at this whole live thing, so tell us where we can improve. We'd love to have your feedback, and share with us what would you like for us to talk about in the next few episodes. Obviously Daniel being here will make it far more interesting, but share with us, what would you like to see in the show? What would you like for us to do? Of course, we talked about ideas like bringing in a CPA, a tax professional, to come and make commentaries about how to save more taxes. We're going to definitely bring expert guests in our show to give you guys content value and help you guys in making more money, investing in real estate, of course, saving and paying less taxes. That's the channel's goal for you guys, and we want to help you tremendously in that regards. Glenn Doherty is asking, are there any particular areas in Illinois that you're focused on? No, I think I hate to put it this way, but I think Illinois, all hope is gone. And I say this, obviously with personal bias. I'm sure there are areas in Illinois that are really good right now for buying. And the reason why I'm not really counting on Illinois, and I'm painting a broad stroke here, and it might be unfair to do that, but the reason why I say this is the Illinois government consistently has been so anti-business for the last, gosh, I don't know how many years, but it's been so anti-business to the point where, this year, I don't know if you guys pay attention to Illinois politics, but this year they tried changing the law to where the lawmakers in the Illinois state government can change the income tax whenever they want. And I have a suspicious feeling that they're going to try to go and apply a progressive tax rate, just like what they did in California. And look how that turned out, right? Look how California turned out, right? Joe Rogan left. We were seeing Graham Stephan leave. We're seeing a bunch of people leave California because they're just sick and tired of the anti-business, anti-entrepreneurship that's happening in California. We're seeing Tesla, right? We're seeing a lot of these companies that leave California to go to Texas where they don't have state income tax, and they're very friendly when it comes to businesses. So the way that Illinois is trying to do and trying to replicate, they tried introducing rent control, first of all, this year and last year, and they keep trying every single year, and they're trying to introduce the progressive tax rate like California. I don't know why, but Illinois is trying to copy the worst state to do business in, and that is California. I don't know why they're doing this. I have no idea. I don't know why they have this dream of, oh, let's become California, right? Let's jack up the tax rate. Let's make it really hard for businesses to run. And come on, Illinois, you can't be California. First of all, you don't have the palm trees, you don't have the beaches, right? Illinois, you just can't copy California, right? If Illinois offered, I don't know, some beautiful scenery, wonderful beaches, warm weather, then maybe, but no, Illinois, no. Please don't try. Okay, no, let's not try to copy California and their vicious way of treating businesses. Okay, so the way that I see it, Glenn, is that Illinois consistently has been going to the direction of anti-business. They've been making it very hard for businesses to sustain, especially business owners. And my philosophy is you got to treat the business owners well, because business owners are the ones that are creating jobs. They're the ones that are going out and employing people. And I think that's the bedrock to the American entrepreneurship and American free market. So I don't know. Illinois has not done well. And we're seeing that by the numbers, because people are leaving Illinois in droves. And I am considering leaving. I'm trying to convince Daniel to do so. But I am in that boat of consideration. Not saying I will leave, in consideration. Okay. We got Young Sung Shin is saying, do you have any local banks to recommend for rental HELOCs? Thank you. So unfortunately, Young Sung, I only offer that to our paying clients, our private membership. If you are interested in becoming a client of ours when it comes to our HELOC program, then you could do so. In fact, Katie, do you have the link for the consulting page? By any chance, it's acceleratedbanking.com/consulting. So you can apply to become a client of ours, have a conversation with us, and we'll kind of give you the information as to what's going on. I think one of the best states right now to invest is going to be Florida. It's going to be Texas. It's going to be Tennessee. Arizona used to be, but I think it's starting to go into that direction of becoming California 2.0. And the reason why I say that is because a lot of Californians have migrated to Arizona. There's a little bit of that fear in Texas as well, where a lot of Californians did migrate to Texas. And of course, there's a lot of Texans kind of pushing back and saying, hey, Californians, don't come here to try to destroy our states. Don't turn this into California 2.0, right? Remember the reason why you came to our state in the first place. You guys left the high taxes. You guys left the ridiculous anti-business policies. Don't try to turn Texas the same way. Well, that's something we got to pay attention to, right? Zach is saying, why are people leaving Illinois in droves? Well, specifically for the reasons I've talked about, right? Illinois spending is ridiculous. They can't balance their budgets. They're increasing taxes like crazy. Property taxes are one of the highest in the country, period. And this year they tried doing this whole progressive tax rate thing. This year, they tried doing rent control. I mean, they've tried to copy California. I don't know why. Like, why can't we copy Texas, Tennessee, and Florida that are doing really, really well when it comes to the economy? You know, it's kind of like saying, if you want to compete in the Olympics, you know, it's like trying to copy the worst country that's, you know, is not dominating the Olympics, right? If you want to try to copy success, you know, let's say you are, I don't know, if you're a runner, right? Maybe you try copying Usain Bolt, who's like one of the fastest runners in the world, not right. So someone who came in last in the Olympics. And that's what Illinois is trying to do, is they're trying to copy someone who's coming in last right now, which is California in terms of economy. I don't know why. It bothers me. So it just makes me disappointed every time that Illinois tries to, make these types of things. So Zach saying, don't worry, Biden says he'll tax the rich and there'll be free money for everyone. Okay, so let's have that conversation. And I know we're supposed to wrap it up, but here's the problem. If you tax the rich and they take their jobs out of state, then where's all the jobs, right? Where do all the jobs go? Jobs don't come magically by the government. And I think that's a weird notion that people have, is just jobs appear out of nowhere. Jobs have to be created by someone, right? Okay, so let's put it this way, Zach. If I leave, and I know you're being sarcastic, but let me make the argument for the sake of people who are thinking that way. But if I leave Illinois today, I take 8 of my employees with me. That means Illinois, it's a meager 8. It's not a whole lot, right? You compare it to other companies that have thousands of employees, but Illinois will be losing 8 taxpayers. That's going to be in the system that's feeding the budget, right? But you imagine like companies like, what's the company here? McDonald's. McDonald's actually is headquartered here in Illinois. If McDonald's does leave Illinois, that's a devastating blow to Illinois. If I know State Farm, I think, was also headquarters in Bloomington, I think. If State Farm leaves Illinois, that's a devastating blow to Illinois. So, and the reason why is they lose tax base. They lose employees that were paying state income taxes, and that's a big problem. So so for the sake of argument, if you tax the rich, if you tax the rich to the point where the rich people leave, and usually a lot of times these wealthy individuals are the ones that create jobs. They're the ones that employ investment dollars. They're the ones that will invest and allow companies to grow, which means that more companies can employ individuals. So for that sake of argument, I think, Illinois is heading to that bad direction. Bad direction. Terrible direction, to the point I think in the next 10 years, it's going to be very hard for businesses to survive if Illinois it keeps on doing what they're trying to do. Okay. Robel is asking, Sam, do you think seller financing is a good strategy deployed in this economic environment? Yes, I think seller financing will creep back up, where we're going to see a lot more seller financing in the next 2 to 3 years. The reason being is that a lot of landlords that didn't quite understand what they were doing are going to struggle, and they're going to want to get out because they're going to be losing money, and they're going to have to file bankruptcy or go into foreclosure. So seller financing, I think there's going to be a lot more seller financing activities in the next 2 to 3 years, which is a good thing, but also a bad thing for landlords who unfortunately did not know what they were doing, and they're going to be struggling. All right, everybody. With that being said, let's go ahead and wrap up the show. Phil is saying that there's a massive invasion of Californians in Nevada, massive attempts this election to take back the state back. And of course, there's a cuss word that I'm not going to say. So Phil is asking, when is your next live stream? I'll ask a couple of good questions. So tomorrow, we'll be back here at 11 a.m. Central Time. We're going to go live every day. Of course, we're not going live on Friday because we are co-hosting a free real estate investing training, which all of you guys should go and sign up for. It's going to be a wonderful event. We have so many beautiful clients, or I should say beautiful speakers. They're going to join us here in the Kwak Brothers studio. So definitely register. It's a free event. Don't miss it. But with that being said, we'll come back tomorrow. Hopefully, we'll have some results when it comes to who is the stinking president of the United States for the next 4 years. Will it be former Vice President Joe Biden, or will it be the incumbent President Donald Trump? We don't know, and I just updated the result. We still don't have any type of progress here. So that being said, I'll see you guys tomorrow. Stay healthy, stay safe, and I'll see you guys tomorrow at the same time, same place. See you guys.